We're on our best 2-year job creation streak in 20 years.
What are you, nuts? Who'd believe that? Let me tell you the truth. First of all, the 292,000 jobs we got in December 2015, and they told us the unemployment rate is 5%. Not true. You can't trust these people on Wall Street. You can't trust the press. What they don't count is, in December, for example, the 615,000 discouraged workers. A discouraged worker is a person unemployed, gave up looking for work, but this administration does not count them as unemployed when calculating a 5% unemployment rate. Instead, they classify the discouraged as marginally attached to the labor force, but they're not considered part of the labor force or part of the unemployment. That's why you can't trust what they tell you. If we back into 625,000, the real unemployment rate is 12%, not 5%. That's why you got to join my gang, where you get the truth and where we use charts. Join the gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. What is Phil's Gang? Philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
Hi, my name is Phil Grande at philsgang.com. The 401k big lie. They tell you invest $10,000 a year for 30 years, compounded at 6% annually. You will have a grand total of $245,000 to retire. That is not true. That is not the truth. What they don't tell you is the hidden fees. There's 27 hidden fees in your 401k. When you're all done, you lose half of what you put aside for your retirement. That's right, half. And another thing, you're not allowed to do individual stocks in a mutual fund. And you're not allowed to make money when stocks go down. That's ridiculous. Would you buy a car with just forward and no reverse? Why would you ever be in a fund that you can't make money when the stock market goes down? Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
At St. Jude Children's Research Hospital, families never receive a bill for treatment, travel, housing, or food, because the only thing a family should worry about is helping their child live.
Doctors send us the toughest cases to be treated at St. Jude, and our patients come from all over the world.
When we come here, they told me, don't worry, everything's been taken care of.
We could never repay St. Jude for what they've given us.
Because of you.
Gracias a ti.
Because of you.
There is St. Jude.
Hi, I'm Phil Grande at philsgang.com. Listen to what Fisher said, the former Fed governor.
We front-loaded at the Federal Reserve an enormous rally in order to accomplish the wealth effect.
That's right. Do you hear that? They took the stock market, front-loaded it, ran at 200%, so we ended up not only with a fake stock market, but fake GDP, fake money, fake jobs, fake prices, fake everything. But we took advantage of that, and we're going to take advantage again. That's why I told my gang in May to short the market. On 5/29, that's May 29th, I'm telling you to short the stock market. And we were right, and the market went down over 11%. That's why you got to join my gang and learn how to short stocks just as much as buying them. Learn how to short with me, Phil Grande at philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. I'm here to help you. I'm tired, and you should be tired, of listening to these financial shows like CNBC where they're all geniuses and they're always wrong. Look, stop worrying about the price to book and the price to sales and all the stuff they tell you you think you need to know. You don't need to know any of that. Anybody can make money in the stock market using charts. It's about money flow. Join my gang, philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, it's been 7 years now since Obama ordered his Fed chairman to lower the savings rate from 5% to less than 0.25%. With the false narrative, it would spur economic growth and jobs. Everyone would have an opportunity in this economy. That's what he said. But what it spurred was a front-loading of the biggest, fake, unsustainable stock market rally of 200%. That's what it spurred. Now, most people did not participate in that rally. because people got out of their 401k in 2009 and they said, just get me out. I want nothing but fixed income. And they got killed because with low interest rates, fixed incomes get murdered. You got to know what you're doing. If you're going to really retire, you got to be associated with the stock market. That's why you come to philsgang.com. That's philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264.
Hi, I'm Phil Grande at philsgang.com. You know, many people left the stock market after the crash, and here's why.
Responsibility begins and ends with our partners and our shareholders, and that's it.
And that's still going on. That's your planner. They don't represent you. They represent themselves, your money manager. But you have to make a change. You can't change them. You make the change. Join my gang, philsgang.com, so that we can take care of you. philsgang.com.
Go to philsgang.com or give us a call at 877-600-4264. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Yeah, I mean, Walmart kicks it off tomorrow, and then we've got a bunch next week. So I think what we can expect for the fourth quarter is some fairly, I would say, soft results. Just broadly speaking, there'll be some pockets of strength, but we've heard from a few retailers already. They've given us a little bit of a look at the fourth quarter. They've either pre-released fourth quarter sales.
Oh my God, I get a headache. Listen to these people. Welcome. My name's Phil Grande, philsgang.com, coast to coast around the country on the Off the Wall Street Radio Network, and the market is on a rebound, up 248 points. This is about the third day that the S&P has rallied. Now, but you got to be very, very careful, because is this really a rally? Well, it's what they call a short covering rally. And as I say, this is the fourth day, I should say. You got to be very careful. You're going to continue to hear these guys on CNBC, the jibber jabbers, tell you this is it. This is the bottom. This is just a technical sell-off, and now's the time to get in and start buying. You got to be very, very careful. You got to be very careful. These are called short covering rallies. Simply means, like us, the gang who shorted the market, who bet that these stocks are going down and did very, very well, okay? Doing that, we have to buy our position back. That boosts the stock prices back up. It's not new money coming in. For example, we shorted Caterpillar. We started to short Caterpillar back in December. So there is about an 18% return, dropped about 18%. Then in the last few days, we saw a short covering rally coming in. Not a buying opportunity, a short covering rally, which means that everybody who was selling short a Caterpillar, we could see they were coming in and say, well, I'm going to take my profits right now, and I'm going to put the money in my pocket, and of course the stock goes up. And we take advantage of that, and we buy over a short period of time, the last 4 days, that's it. But this is not a buy and hold. So you got to be very, very careful. You're going to get caught now, or someone's going to convince you, hey, this is the time to buy Caterpillar. You better get in. You don't buy Caterpillar until you get what they call a real buy signal. What's a buy signal? It tells you the institutions that own Caterpillar, they're buying. New money's coming in. But that's not what's going on. So please be very careful when you hear these babbleheads and these jibber jabbers on CNBC telling, boy, things are great. This was just a technical bounce. Don't worry, or technical sell-off. Don't worry about it. It's not true. Stock market, these are very large short coverings. This is one of the largest short coverings I've ever seen. I haven't seen this one this big. And again, how do we know that the market is finished selling off. Well, you always know. And we haven't seen the signal. What is the signal? The signal is you see a big surge. You get a big surge at the end, and where everybody just panics and says, get me out at any price. We didn't get that at all. So the bottom's not in. Now, does it mean the market can't go up 10, 12%? Sure it can. But it's not going up on earnings. It's not going up on profits. Not going up on top-line sales. It's going up because the people who shorted it buying their stock back. And there's nothing wrong with that. We're going to do very well with that. Matter of fact, we just took our IBM, and IBM was that we had, as I said, IBM, we sold it short back in November, and I make sure it was November, and we had a 13% gain. And just in the last few days, it's up 6%. 6%. And my gang members could catch that 6%. But again, remember, it's not a buy thing. So you got to be very careful. The one thing I really get upset with is when they keep telling you, oh, this is it, the cash is coming in on the sideline, from the sideline. Don't ever listen to these people, these jibber jabbers on CNBC, con you with the cash is coming in from the sideline. Boy, the cash on the sideline is incredible. It's going to come right to this market, going to really take this market, and it's going to just take off. That is a lie. That is a myth. They've been using that trick for years. Be very cautious when you hear the cheerleaders on CNBC try to take parking space in your head. They've got all this cash on the side that's going to start coming in, that the bottom is in. Don't listen. Don't listen to that. Sideline simply means money from CDs or savings, some other savings. Well, wait a minute. The reason the money is in CDs or in savings because those folks don't want to take any risk. They don't want risk. So they always keep their money in CDs and savings. They're not going to take their money out of CDs and savings and put it into the stock market, but they don't want you to know that. Wall Street doesn't want you to know that. CNBC doesn't want you to know that. Well, and what a great story. That's a perfect story. Isn't it a great story? They want you to think, oh, I better get in the market right now before all the sideline money comes in. I better get in there. And that's one of their biggest tricks, to try to excite you, to try to stimulate you. We have what they call a V-shaped rally right now, which is the same thing as a short covering rally. It looks just like a V. Stock went down, went back up, straight down, straight up. That's a V-shape. That is not a green light for buying. It's not a green light. You know, they always talk to you about, you always hear too on these financial shows, don't try to time the market. Don't try to time the market. Wait a minute. Of course you're going to time the market. We do that every day, and we do terrific at it. We time it perfectly when it's ready to drop, and we time it perfectly when it's ready to go up, using our charts, watching the money come in, or watching the money go out. Timing is everything. Isn't in life timing? Timing is everything. Life is about timing. Actors, just ask any actor. It was his right timing, or the right movie is the right place. Just because you see the greatest actors, that doesn't mean they're the greatest. There's somebody else out there that's better, but they never got the break. You see a great baseball player, football player. They're supposed to be, they're on the field, they're great. There's somebody in the stands, I'll tell you, is better than them. But the timing was wrong for them. They didn't get the break. It's the same thing with stocks. It's always timing. And that's why you want to use charting, because charting identifies the time for you to buy, the time for you to sell. So don't believe that. Timing is everything. The reason you're told that you can't time the market, because your money manager, your broker, he wants to make sure that he can get you to buy at any time. Otherwise, he's going to be sitting around twiddling his thumbs waiting to collect his fee, his fat fee. You think he wants to sit around for a couple of weeks or a month and he can't collect that fat fee unless you buy? Because remember, they don't let you short. Isn't that ridiculous? So timing, of course they're against timing. They're going to tell you not to time. Because they want at any time, pick up the phone and tell you, hey, I got this hot stock, let's buy it now. Every stock, the beautiful thing about the stock market, every stock has a buy signal and a sell signal. You just got to know what it is. It's like Wall Street keeps it secret from you. How do they keep it secret? By telling you buy based on fundamentals. So all you're hearing right now is that the bottom is in, We had a little technical correction. Start buying. It's not true. Since the beginning of the year, we've had around 30 days of trading, but only 6 of those days on the S&P have gained 1.4%. Yet we're still down about 7% for the year. Yet the jibber jabbers are telling us, wow, go out and start buying right now. Now's not the time. Now, if you're a short-term trader and you trade within a parameter of a couple of days, 3 days, yes, but then you get out. So again, if you hear that this is it, the bottom's in, don't believe it. Not true. More when we get back. 15 past the hour here on Phil's Gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi, I'm Phil.
Anybody who puts money in my pocket is my friend. And Phil Grande can do the same for you. Learn how to grow and invest your money. Here's Phil Grande. Stock Corner is brought to you by the Phil's Gang video channel. Go to philsgang.com. Click on the video channel graphic and check out Phil's free videos on the market, economy, and current events.
And welcome back to Phil's Gang. Remember, if you want to join my gang, you want to subscribe, it's a good time to join. Just go to my site, philsgang.com, or you can call now, 877-600-GANG, 877-600-GANG. Steve or Denise will help you with your subscription. Now, let's talk about Kramer a bit, and why, if you use a chart and you follow the money that's going in, that's when you buy. Okay, you buy it when the money goes in. Now, he's telling us not to buy a certain stock because it's too cheap. Listen how stupid this is.
Here's an odd one. Green Capital says buy Etsy, ETSY, into the quarter on the 23rd. I'll be speaking to them. I'm running a panel tonight at the Brooklyn Historical Society, speaking to some of the big Brooklyn companies, including Etsy. I am not kidding. This company may have reached a level where it's just too cheap.
Really?
Why? Why? Because they've made a lot of changes.
So company makes a lot of changes. You judge buying a company based on it, maybe put new furniture in, maybe open up a new store or something? Of course not. You make a decision to buy a stock if the institutions like the fire, police, teachers, the unions decide that they're going to buy the stock. If the guy who is managing their pension decides to buy the stock, you see millions of dollars going in, you go in and buy it. Remember, the pensions, they have experts. They have experienced people. They have people that know what the hell they're doing. They've got to make money. They have to make. If you are a teacher or a fireman or a police and you're in a union and you put your money away to retire and they have the big pension funds, the guy that's managing that fund, he's under a great deal of pressure. And he only gets paid when they make money. He doesn't get paid when they don't make money. Not like your 401k guy. He's a dope. Any dope can run a 401k because, one, they never short the stock. They never let you short it. They don't do individual stocks. And he's paid only on the amount of people that come in and put money in the fund. It's on the size of the fund. He hasn't got to do any work at all. You can get a monkey. You can get a dog. You can get anything to run a fund. It's the pension fund is where you need the brains. So what we want to do is, with our technology today, is to identify on the chart when they're going to put that money in. Give you an example. We put up the chart, ETSY. You know the stock is going up 20%. 20% since 27% in 2 days. And he said not to buy it because they made changes. We had a buy signal. It's a W formation. There's a little W formation that tells you, okay, when new money's coming in. But why this went up so fast? Not only did it have new money come in, but also had the people who were shorting it. Because remember, if you were a gang member and shorting it, this stock dropped from $9.61 all the way down to $6.18. So that's a 35% drop. Instead of looking at it as an opportunity, see, these guys on Wall Street, like Kramer and the rest of them, they always have to give you a story. It's always story. And he gave you a story. I bet he regrets it. Listen to this. It's always story time on Wall Street.
Wall Street can be deceiving.
I think Wall Street is distinctly different than every other part of the economy because Wall Street in the end deals in fantasies. They trade in the promise. And when the trading and the promises get completely out of hand and Wall Street is really just dealing in phantoms, that's where the danger comes.
Yeah, fantasy stories. Take oil now. Oh, and by the way, the symbol is ETSY if you want to take a look at it. Go to my show tonight. It'll be archived. Go to philsgang.com and you'll see it. And it had a buy signal. Now, as I said, they have stories. It's always story time. Right now, oil has been the big story. The story. that all of a sudden now oil is tied to the stock market. Oil is tied to the stock market. It's a fantasy. So the jibber jabbers are now looking for market guidance from oil. What are you, nuts? You look to market guidance by earnings, investments, savings, earnings. You look to guidance, debt. How much debt is out there? Oil? If oil goes up, the market goes up. Oil goes down, the market goes down. When's the last time you've heard that? We were always taught, right? And always heard on watching all these programs, earnings, mother's milk of the stock market, earnings. Oh, but now that story doesn't work, so they got to get a new story. So now it's oil, the jibber jabbers. Tied, oil goes up, market goes up, oil goes down, market goes down. Now, here's the real situation with oil. Okay? So if we're going to follow their let's say misguided logic, then let's look at it this way. Oil needs to hit $40 before the pressure comes off. All the investments that go into the oil patch and the fracking and everything else, when you're going to make an investment, you base it on, okay, if I'm going to give you this money, for me to make a return, how much does oil have to be a barrel? They do an assumption. The assumption is always based on $40. We have not hit $40 yet. I think today the high was around $29. But until oil hits $40, that tremendous pressure is going to be on oil. Tremendous pressure is going to be on oil. So, again, oil, what was the high in oil? $38 today. Oil went up to $38. Now it's 30, bounced back down. But my point is that if that's the story they want to use, fine. Let them use that story. That's great. So that means everybody's going to be looking at the oils as, I'm not going to buy them. I'm not going to buy it because, gee, until they reach $40, these companies can't do well. Really? That's when you buy a stock. You buy a stock when nobody wants it, as long as there is a buy signal. And that's exactly what the pros do. That's exactly what the institutions do who represent teachers and fire union and so forth. Join my gang. Get my subscription. We'll be right back. 28 past the hour on Phil's Gang, and that's no story.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Hi.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. We're talking about stocks. And, you know, it's interesting. Starbucks. Let's take a stock like Starbucks. Everybody's in Starbucks. You're going to be jumping in that stock, aren't you, buying it? You guys, oh, now it's time to get in. No, not yet. What you got to do is you got to wait for the stock market to get done with the short covering rally. So what you got to do is you just put up your chart and you put a symbol on SPX. And when you put the symbol in, it's going to tell us until the stock market reaches 1978 and holds 1978. It's got to hold 1978 for about a week. If it holds that area there and we get a lot of buying there, then the selling is done. You're going to go into another nice rally. Until then, until you hit that 1970, remember, the market tested the 1810. We couldn't break through because remember, they came in, the Fed came in and really put support under it, printed money, got the banks to buy the stocks, push all the stocks up to hold that 1810 because they knew if we went below 1810, the stock market would go down another 20%. Remember, the stock market has been in its crash since I announced the crash back in July when we went short on the S&P at $212. We had a nice 14% return in the gang. Now, and again, when I say the gang, not everybody in the gang got the 14%. Remember, we're a teaching format. We tell everybody, okay, here's the chart in our classroom. We put it up. We say, there's the sell signal. So, again, it depends on a person's risk parameters, what he wants to do or she wants to do. The point is, with the charts, we identify very easy, very clearly, when you have the sell signal, when the institutions are pulling the money out, when the institutions are putting the money in. That's what we're doing now. We're now watching. And we have not yet had a buy signal on the S&P. So the S&P, once it gets to, let's say, 1970, 1978, and stays there for 2 weeks, then it's a green light to buy. But it's not a green light to buy now. Now, you can do buying, and my gang member is doing it. We're doing it on a shorter time frame. We just use a shorter time frame. We stay in it for a couple days, that's all. And we catch these short covering rallies. It's a lot of fun to do. You can make some money at it. But for those who just don't, who just like to be in stocks for a longer period of time, don't want to do a lot of work, it's not time to buy for you. I'll let you know what it is. And that's why you should subscribe. Because I'm going to tell you, when this market is ready to take off, you want to be in Starbucks. You want to be in Apple. You want to be in Disney. And right now, Starbucks is not the time to buy. There's no buy signal on Starbucks right now. I'm looking at it. There's no buy signal on Starbucks, and that's what you need. And what is it? What is that? What is a buy signal? Simply means new money is coming in. But you've got to have there's a certain pattern on the chart that tells you if it's new money or if it's not new money. Okay, you got to have new money. And then, as I say, it doesn't matter if the one stock goes up. You got to have the whole market. You need the whole S&P to be in that position where all the institutions are buying. You get that green light. Even if you get one stock that looks like it's ready to buy, you've got to have the stock market underneath it. Because a stock on its own, without the stock market, the whole stock market under, you could have a wonderful stock. You could have Starbucks, you could have Apple. They look like they're going up. They even have a buy signal in it, but it's not going to sustain itself unless the entire stock market, including the financials, you got to have the financials very, very strong, or any rally you get right now, you're going to lose it. You're going to lose it. The bank stocks are the most important thing. If you think any rally can hold itself, unless you have real healthy purchasing of bank stocks by the institutions, you're wrong. Right now, you know the bank stocks are so weak, and that's why this can't last. This rally's not going to last. It can't sustain itself. So what you do is you just bring your time frame down. So instead of investing for 6 months, why don't you bring it down for 6 days? Nothing wrong with that if you know what you're doing. And that's why you should join the gang. Become a subscriber. And just understand this too, that it's very interesting. We're going through all of this stuff with the elections and the presidential election. And of course, you heard Obama yesterday go after Trump. And here, let me play this for a second.
I continue to believe Mr. Trump will not be president. And the reason is because I have a lot of faith in the American people. And I think they recognize that being president is a serious job.
4.
It's not hosting a talk show or a reality show. It's not promotion. It's not marketing. It's hard. And a lot of people count on us getting it right.
If you like your doctor, you will be able to keep your doctor, period. If you like your health care plan, you will be able to keep your health care plan, period.
You're lucky I didn't run last time when Romney ran, because you would have been a one-term president.
I mean, who the hell does he think he is? He's talking like, oh, you got to get it right. You got to be a professional politician like me. No, we don't want professional politicians like you. No, we don't. The only legacy that Obama is going to leave is a legacy, no experience needed to be president. This guy, what experience did he have? None. At least Trump has experience, real world experience. He didn't in 1995. Trump, like Obama, the age of 34, his best buddy has a Senate seat, one of the most popular Senate seats in Illinois, and it is the state legislator level, and she gave it to him. All she had to do is say, I want Obama to take my place, and everybody voted for him. I mean, it was just no work at all. No work at all. Then 2 years later, he decides he's going to run for president. Are you kidding me? Where's his experience? And we all know this, that he's nothing. He's a neighborhood organizer. So come on, this is ridiculous. But my point, too, is this. Let's talk about the Congress. The Congress is what makes me sick. We need a strong president to stop this nonsense with Congress. Congress has a great amount of influence on your 401k. What do I mean by that? You got to understand who owns Congress, the elitists. The elitists, and they have a collective mindset. They really believe that the world can't function unless they get richer. We're talking about a small segment of the population. And they do get richer. And when they create such wealth, they buy Congress. And they made sure for the last 7 years, Congress would not put policies in, economic policies in place to improve the economy. Now, listen to what I'm saying. The very wealthy, who 85% of their wealth is in the stock market, they wanted to make sure the economy didn't do well. They wanted to make sure the policies weren't in place for the economy to do well. And by God, that happened. Obamacare, we never had so many part-time jobs in our life. Are you kidding? And other policies. My God. Why do they do that? Because they make more money in a bad economy. The elitists, the wealthy, the stock market. Because you got to understand, they will tell Congress, okay, what we want now is have the Federal Reserve give us money at 0% so we can buy our stock back. An accounting trick. They make more money buying their own stock back than borrowing money to buy inventory and to hire people, get the inventory out there, market it. Are you kidding me? They want a down economy. So they own Congress. They are the Federal Reserve. These elitists are the Federal Reserve. So they say, now they can start buying their own stock back with 0% money. That's why stocks were going up. And they keep interest rates at 0, so everybody on Main Street gets screwed, because on Main Street, and when interest rates are low, and you're in CDs, and you're in savings, and you're getting killed. And you're not getting hired. There's no jobs being created. QE is another great example. They own Congress, the elitists, the wealthy, small segment population. That's another thing they want. Give us QE now. Now, they couldn't ask for QE or stock buyback money if the economy was doing well. QE, are you kidding? They put in $3 trillion to push stocks up that had no earnings. We'll be right back. Join my gang. Subscribe right now. Denise is on the phone, and so isn't Steven. You'll love it.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
Leonard.
Welcome back to Phil's Gang Radio Show. For more information, simply go to philsgang.com. Now, here's Phil.
And welcome back to Phil's Gang. You know, when we shorted Caterpillar and IBM, on average was about a 15% return, a little more than that, because we knew when the institutions were going to take the money out. Now we're on the other side of it, going back up the other way, and already in a few days, we have 11% in Caterpillar, about 6% in IBM. So that's pretty good. But once you have that control, once you have that comfort level where you're not worried, you're not scared, you control. Just like when you drive. When you have total control of that car, you know it, you understand, you feel good. You do baseball, you do skiing. You got to have that control. And the more experience you get, you just feel better. You get in a comfort zone. By giving your money to people that manage for you is ridiculous. It's your money, number one, not theirs. They're there to fill their pockets. And when you take our Congress, or example, I just told you when we first opened the show, that Wall Street always has to give you a story. Oil's the story now. Watch. Before, remember the story was Draghi every morning. What's Europe doing every morning? The story was China every morning. Now it's oil every morning. It's always storytelling. Kramer, he told you a story about Etsy, ETSY, the symbol. He missed a 20% move that we would not have missed. It's ridiculous. It's very simple. If you just would take the time to learn. And it's not a lot. We have, for people who are so busy, we do a special program. It's on at 1:30 in the afternoon. And it's called our Working Investor Update. It's a little webinar every day for people busy, don't have time. All you have to do is buy the Spiders, SPY. It's a bucket of 500 stocks. And we follow that for you every day at the same time. When to get in and when to turn around and short it. So simple. You buy SPY, the symbol. The market will get the signals. They're pulling their money out. It's going to drop like I did back in May. In July, we went short. So easy. That's all, just one spider. It's all you need. Just a spider. It's all you need. But especially know how to short it. So easy. So what you should do is subscribe. If you're very, very busy, start with that. I mean, you have access to all our programs. Working Investor Program. You have access to all our programs. It's up to you. But that way, all you got to do every day, 1:15, and it's archived. So simple. But I also want to go back to this thing about the storytelling. Why do you think they lie to us and tell us the unemployment rate's 4.9% when it's 23%? Why do you think they lied to us when they say they created 14 million jobs when they didn't? Created 9 million? They're stories. It's for Congress and the president to vindicate or to justify their failed policies to grow the economy. We haven't grown. They say it's 1.7%. We have negative growth, but let's use their lie. It's their failed, again, it's to justify the failed policies, like using 0% interest rate. Why do you think they used 0% interest rate? It's because the rich, the wealthy, the 1 percentile that control the stock market, they want to get rich. So they don't want the economy to do well. See, to improve the economy means you got to improve jobs. You got to make available high-paying full-time jobs. In order to do that, you need to raise savings rates. Well, the wealthy don't want savings rates to go up. That's like kryptonite to them. Because if you have to raise rates to raise savings to get that money to invest, to grow the economy, that's all for capital investment. You got to have money to invest. Where do you get the money to invest? From savings. So you have to raise rates to attract money. And then from the savings, there's capital investment. Goes into a company. Goes to Main Street, small business. They create 70% of our meaningful jobs. The elitists don't want that because that means interest rates go up. They want the economy to be bad, so unemployment's bad. So they can go in and say, look, now give us money at 0% so they can buy back their stocks. An accounting trick for CEOs. And the big shareholders of these companies. Are you kidding? Quantitative easing. What a beautiful thing. They sit there and print money, $3 trillion, 3.3 trillion, and shove it into the market. Stocks, move stocks up without any sales, no earnings. But why do they do stock buybacks and quantitative easing? So the wealthy who has 85% of their net worth in stocks get richer. So to improve the economy is ridiculous for them. That's the last thing they want. Just go here in Sarasota where I live. You'll see the rich and you'll see the poor. The rich, unbelievable, the condominiums, the homes they're building on the Gulf of Mexico here. The boats at the marina. They got to build another marina. They can't keep them all. They're so big. They're huge. Because that's when they make money, when the economy is doing bad. The economy is doing that. And that's why we're screwed. But the stock market went up 200%. But you weren't part of it, were you? You weren't part of it. Oh, I don't want nothing to do with the market. I'm going to put my money in a CD. Oh, yeah? How'd that work out for you? Didn't work out, did it? So the more money they make, the more they own Congress. And by the way, there is no Democrats. There is no Republican. Why do you think they call it the Democrat and Republican Party? Because that's what they do. They have a party with our money. They have a party with our money. And what else are they doing now? The Democrats and the Republicans. You really think they're fighting with each other? It looks it, but they're not. They're both right now trying to figure out how to spend more money. Our money. It's unbelievable. So what do? Let's focus on creating our wealth. That's all we can do. Now, I'm not Goldman Sachs. I'm not JP Morgan. But I can at least show you on a chart, if you want to try it, see if it works. How do you know when money's going into the stock? How do you know when it's coming out? And we'll help you set your own parameters when you want to get out of a stock based on, or into a stock based on your own risk parameters. We'll show you how to do it. It's an educational format. But for God's sakes, to sit back here and to jump, now you see the market going, you didn't miss the short, you missed the shorting all the way down. And now the stock market goes up 4 days, you all want to jump in. And you're going to hold off, and you're going to get in just as the market sells. As a matter of fact, I just told my gang members and showed them, let's get ready to start selling short again. Because these stocks that are going up, straight up, it's called a V-shape, straight up, they're going to be beautiful to short. Because we're going to short them right into what they call resistance. Setting up beautifully. Look, all I can tell you is that there's nobody out there that's looking out for you. Nobody in Congress is looking out for you. No president's looking out for you. You think Obama's looking out for us? Are you kidding? The one thing I can tell you is this, that I don't care if it's Cruz, I don't care if it's Trump, you need somebody who is independent. And Trump is perfect because Trump is not owned by anybody. He's not owned by anybody. He's the only one that could take Congress and straighten them out for us. He can't be bought. Well, how are you going to buy a guy that's already a billionaire? And also, he doesn't need the job. Obama needs the job. These guys in Congress, not so much now, 200 of them are already 200 are millionaires. But before then, most people in Congress, they needed the job. Obama needed the job. He was broke going into the presidency. So again, the market's up 254 points. Don't make a mistake thinking I'm just going to jump in now. Please subscribe to my site. We'll identify the stocks for you. We'll show you the buy signal. And again, the perfect program for you, again, is at 1:30. But it's archived and go look at any day, and that's our working investor, simply working investor. That's what it means. If you're working and you want to make some money, you can't tie yourself to a screen or anything else, check it out. You can call now, and I'm telling you, you'll love it. Because you can just look at the spiders. 500 of the best stock, and guess what? very little fee. Not like your 401k. You're paying 65% of your money in fees. Are you kidding? Join my game. Subscribe. Call now. 877-600-GANG. Phil's Gang. Denise is waiting for your call. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.